Okay, well, this is the one trade setup that you can't live without. We at Product Traders have developed multiple different trade setups to match the different types of markets. In the market trends, it reverses, it ranges, and you actually need a different type of setup for each one of those. Most people, they learn a simple moving average crossover and they try to trade that in all those markets. And the reality is that the moving average crossover system is basically good for a trending market only. And since the market ranges 70% of the time, then every time you try to take a trending trade in a market that's not trending, you end up having a loss. But one thing that happens whether the market is ranging, reversing, or it is trending is that momentum enters into the market at all times, and it enters to try to strive to get to a target. Now, in a ranging market, the target is drastically reduced. It may only be 20, 25 pips away, as opposed to a trending market where it may be 100 or 150 pips away. All right. So this is the one setup that we look for every day, because whether you're in a ranging market or a trending market or even a reversing market, we're looking for that first pulse of money to achieve the first target. Okay, whatever that happens to be, and that money will come in every session, the London, the Asian, or the New York session, and it provides a momentum setup for us. So I'm just going to show you how it works. I've got July 25th, 1950, and this is called the Gatekeeper. This is called the Royal Flush template right here, and the charts that we're interested in are this one right here and this one right here, and we're looking for harmony. All the rest of this stuff is for another trade setup, but this is just these two charts right here. This is called the trigger up here, and this one is called the Gatekeeper. So I'm just going to pull it up to you here and show you what we look for. So I'm going to push it ahead, and you can see right there is what we call a blackjack candle. Now, when the blackjack occurs, it's showing momentum entering, and you can see that momentum enters in all these blackjacks. You're seeing basically shifts in momentum. As it was going down here, the momentum shifted to the upside, Here there was an effort to try to take it to the downside and was not successful. So by itself, a blackjack doesn't mean a whole lot, but it does tell you one thing: money is entering. And you notice at the bottom of these blackjacks there are a green diamond going up, or if it's coming down, we have a red diamond going to the downside. Okay, so we use technical analysis and we decide what we're looking for today. Are we looking to be a buyer or a seller? So in the case of we've decided we want to be a buyer, we would ignore any momentum shifts to the downside because we know they're not going to go anywhere, because it's against the trend, it's against what the market is trying to do. So when a blackjack occurs right here, it has to have the power to change the moving average from the previous red up to green if we're going up. It's just the opposite if we're going down. You see over here, we were coming down here, we were red, and we changed to green, and then up here we were green, and all of a sudden we changed to red right here, and it changed it to the downside. All right, so if we're looking for the buy, we have to have the blackjack first in play, and then the power to change the moving average to green. The next thing we need is that we need to have a candle above the moving average. As you can see, that's above this moving average. And the last thing we need to have is this HMI indicator right up here in the corner, and that tells us that there is enough power in the market to drive this to a target. And if we have those two things, a green diamond on the bottom, green moving average, green candle above it, and green HMI, if we're looking for a buy, then then the Gatekeeper says you're good to find a trade. It's just the opposite if we're going down. You can see we had a nice little move here. We would have needed a red blackjack here, a blackjack with a red diamond, moving average turned to red candles below the moving average, and a red HMI. So it depends on what you're looking for. Once that occurs, that's called the trigger. Then we go up to that's called the Gatekeeper. Sorry, this is called the trigger. Now, what we need on the trigger is we need an arrow and a painted candle. Now, that's kind of hidden in the white there, so let me take it off there just to show you where it all started. So you can see when we get an arrow and a painted candle, that is our trigger. Okay. Now, one of the keys that we have to be on the trigger is out of the desert. Okay. And this is the desert. This is the highest moving average. This is the lowest moving average. So, like for instance, if that would have occurred down here where the moving average is here, we would not pay any attention to it. But when it is moving away from the desert, headed away from the desert, and that's this area right in here, then we're interested to it. So this candle prints, and the next candle is our candle. All right. So let's just see what happens here, and there we go. That's our entry candle right there. Now we would maybe expect a little retracement here, and but remember, we've got a good trade because we got two charts using different math telling us momentum is entering to the upside. So there's the retracement. That's what we really want to do. We have a saying here at the ProAct Traders is that before you enter, let it center. So you see, we would let that candle come back halfway, and we would take that right there. All right. So we would now be committed to this trade right now, and you know, goes sideways and up she goes, and a little bit of sideways move and up she goes and continues on up. And let's just see how far this thing goes. All right. So you see, now notice that we never lose paint. It's always bright green because the momentum is staying in the charts, even in these sideways movements here. When there isn't any momentum in the market, we get these candles that have the black outlines here. That means that they're going up or going down, but there's nothing moving them. Okay. So you can see that was a pretty good trade there. So how would we know where we're going? Well, we have a little tool called the HSI right here, and we just simply find a bottom. Here it is, and we would know by clicking on it. We would say I'm a buyer, and it will go find the targets. And you can see our first target would have been this one right here, and the next target would have been this one right here. And that's what we did. All right. So you know, how far is it? This is probably about 30 pips roughly in here, and this one up here is probably 50 to 60 pips. Somewhere in that range. I mean, we could add it up, but you could just see that that's roughly what it is. And so this is a trade setup that occurs virtually every day across multiple currencies. Can happen anytime, and we only pay attention to them in the first 2 to 2.5 hours of the session. That's when we want to grab this trade setup, and we want to take it to the targets. We are target traders here. We don't click out for a lousy 5 to 8 pips, and the reason we don't do that is we have the ability to find the target, and since we know where it is, there is no reason to click a trade out for 5 to 8 pips in here when you know the target is 60 pips above you. So I can tell you one thing: our traders at ProAct Traders would never be without this trade setup in their life because of how often it occurs and how statistically reliable it can be to get you a great trade, a great entry, and then the HSI tool gets you a great limit, so you know where you're headed. And so that's it. That's a great trade, and you don't want to be without this one.